Yo, what's up investors? It's Buffy here from Tycoon Talk, and today I'm covering what they didn't tell you about savings accounts. So subscribe to the channel and get ready for a lot of valuable tips on how to improve when it comes to savings. Cheers. Now, all of us know that money matters to some degree. Whether we want to admit it to ourselves or not, that's a topic for another day. But we can all agree that one of the most important foundational building blocks when it comes to wealth building and a solid financial plan is the savings account. And so whether you're a seasoned maestro on money matters or you're just beginning your financial journey, this video is tailor-made for you. We're about to unravel the secrets of savings accounts, exploring the in and outs, including the do's and don'ts, and everything you need to know to supercharge your savings. I know you're excited about all the investment topics that we're going to cover on this channel, which we will. But the most important foundation when it comes to wealth building is savings. If you're not in good habit of practicing how to save, forget about investing, because fundamentally investing is a form of savings. The truth is that the landscape of personal finance is vast and ever evolving. And at the heart of a sound financial management is the fundamental role that a savings account plays. As your dedicated content creator on financial literacy on YouTube, it is incumbent upon me to dive into the intricacies of savings accounts so you can benefit and build generational wealth. Savings accounts offered by banks and credit unions are more than mere repository accounts. They are dynamic financial instruments. These accounts provide a dedicated safe space for you and I to deposit and preserve our money while earning interest simultaneously. Yeah, let the money come in, baby. Let it rain. And it is important to know that there are some distinctions between checking accounts and savings accounts. And if you want to know exactly what they didn't tell you about checking accounts, you are in luck. I've created a full-blown video on checking accounts. Just head over to my channel, check out the playlist, Everything Finance, and you will find that video in there. But let's continue talking about savings for now. Unlike checking accounts, which is more so focused on transactions, savings account, however, has a different fundamental value, which is about stability and growth. And so it's about long-term saving plans and having the money work over time. In order to fully understand savings accounts, you have to appreciate its significance in wealth building. It is the holy grail. One of the superpowers of a savings account is that it serves as a financial safety net that is backed by the US government. So for example, it is FDIC insured, meaning you can have up to $250,000 in your savings account. And if something is to happen for unforeseen circumstances, account glitches, whatever happens, that $250,000 is backed and protected by the US government. So let's say that money disappears from your bank account, guess what? As long as it's not your fault and you didn't deliberately move that money, guess what? The US government will reimburse you $250,000. Show me the money. And this element of security is fundamental to establish trust in the financial system. So I don't know about you, but I am certainly glad that the government will reimburse up to $250,000 in my savings if something is to go wrong within that account. Most of us don't have $250,000 in our savings, but whatever amount you have, anything in between that is going to be reimbursed if something does, in fact, go wrong. And that just sparked an interesting thought, because now I'm thinking, has the US government ever reimbursed somebody more than $250,000 by accident? Maybe I need to do some follow-up and do some research on that. So we'll see. Furthermore, we have the opportunity to earn interest on our savings account, though not as aggressively as other investment vehicles, but nonetheless, it is still a pretty decent amount versus the money that would end up being in your checking account that doesn't really earn any interest for you at all. And so this provides a steady and consistent avenue to generating more money and building wealth down the road because of something very special that I'm in a long-term relationship with, which is compound interest. Compound interest is like a snowball effect. You earn money not just on your initial savings, but you also earn money on the interest that has already been added to the account, and therefore your money grows exponentially and it grows faster. It compounds over the long period of time, and the longer you invest or the longer you practice saving for, the more money you're going to have in that account by default. Like I said, I'm in a long-term relationship with compound interest, and guess what? Everybody else can also be in a long-term relationship with compound interest. And that is not considered cheating. We're all winning. One of the most important reasons why you want to have a savings account, aside from just earning interest, is you need an emergency fund for your life. Not for your money, but for your life. I'm pretty sure at some point within all our lives, there are going to be times where things are difficult. We can't make ends meet. We might lose a job. Interest rates might be high. Debt levels might be high. Certain things will happen in life where you need cash reserves. And the savings account is the perfect place to make sure you have something to fall back on. A NASDAQ article survey conducted revealed that 36% of Americans have $0 in their savings, 19% of Americans have less than $1,000 in their savings, and only 45% have a little bit more than $1,000. And this is a huge cause for concern. As the public, we need to do a much better job of prioritizing the habit of saving. And I get it. Life circumstances are hard. You get unexpected expenses and things come up all the time. And so you might be thinking, hey, Bafi, I can't afford to save. I don't make enough money. I have too many bills. I have too many debt. And I don't know how or where to even begin when it comes to savings. Well, my question to you, and something I want you to think and consider, is if you can't manage to save today, chances are you won't be able to save tomorrow, right? Because you might be thinking, maybe when I get a better job, when I do this, when this happens. But guess what? Sooner or later, tomorrow becomes today. And the same habits won't fix your savings challenge, right? And so insanity is repetitively doing the same thing over and over and expecting different results. So here are some quick tips on how you can improve your savings as we get into 2024 and beyond. Many of us have serious life and financial responsibilities, and so we're living paycheck to paycheck. We can barely make ends meet, and so we have a lot of debt that we have to, pay on a monthly basis. This is one of my recommendations to you if you're in that situation. All the debt and financial responsibilities that are not essential, meaning like if they're not rent or mortgage, if they're not food, if they're not essential to your day-to-day livelihood and your family being able to survive, when it comes to those debt, make the minimum payments on that and begin putting some money in your savings. I don't care if it's number one, I don't care if it's $100, $50, $1, or $500. You need to put something in that savings. And so the moment you get paid, the first thing you should always do, no matter what, is put some money aside in your savings and then split the rest amongst all the bills and all the financial responsibilities. Now, you might be wondering, why am I telling you to put money in your savings first before you pay everything else? Because the opposite of that has not been working. And that's what the majority of people do. As a tycoon, when you get paid, you must pay yourself first and everybody else second. If you pay everybody else and all the expenses go out, guess what? There is always nothing remaining. And even if there's a little bit remaining, that's the one you like, oh, I gotta live life a little bit, enjoy myself because I work hard, right? And so you wanna flip it, you wanna reverse it. Pay yourself first, split everything else amongst. And over time, you will see your savings definitely grow. The second tip is to have a savings target. If you do not have a target, you will not know where you're going or what you need to hit or when to pivot, when to adjust, okay? And so most people would tell you to have 3 months of living expenses saved up. As a tycoon, I like to tell people to save at least 6 months to a year, right? 6 should be your lowest base case. A year, ideally, should be your maximum base case. In an event where something happens where you lose a job, you get sick, or your company just goes out of business, right? Or unexpected expenses happen, you got to go buy a new car, or a tire blew out. You got to, get the car serviced. You need to, spend a little bit more because it's a holiday season and you might be buying, holiday gifts, or you're hosting events and it's birthdays and anniversaries. You want to make sure you have an emergency money of at least 6 months in the bank so you don't have to worry about it. Ideally, at least a year. And what that's going to do is buy you the highest level of peace of mind. This impacts and improves your mental health, your physical health, your family relationships, and all the dynamics that you have within your life. So make that number one priority. If you don't have an emergency savings in 2024, make that the number one priority to develop and have an emergency savings, because when things hit the fan, we have nobody to turn to. And for the majority of us, when things get worse, guess what? We end up digging ourselves a deeper hole into more debt. And it makes it nearly impossible to kind of come up for air and begin building generational wealth. Okay, this is important. Don't sleep on it. I'm telling you. Another tip I have for you to improve your savings account is to, again, attach the money to a goal, right? Whether you're saving for a down payment, you're saving for a vacation that you've been planning to reward yourself for all your hard work and making progress when it comes to paying off your debt or investing X, Y, and Z money, okay? Attach the money to a goal. Perhaps, maybe, it's your significant other's birthday coming up and you want to save towards that. Maybe you like cars and you want to save towards a car. Maybe you want to get the next Xbox, the next PS5. I have no idea. Maybe, you want to splurge a little bit and enjoy certain things in the summer. Attach the money to a goal, because that also encourages and gives you incentive to actually put the plan into motion. And most people does speak about savings as if you only have to use it and plan for emergencies. No, you can plan for opportunities. Maybe you want to take a specific course. Maybe you want to go to school, right? You can do all these things. But perhaps the biggest advantage that savings also have, especially the money that you don't need for an emergency, is you can take advantage of almost every opportunity that comes up, right? You guys know that I'm big on stock market investing. When things hit the fan, when the economy slows down and we get into recessions and corrections, unemployment is high, geopolitical tension, the economy is not expanding into a bull market and things are just tightening up. Interest rates are high, inflation is high. Who do you think is going to benefit? Is the haves versus the have-nots. And if you have savings and you've made a good amount and you've been able to put a good amount aside, when the stock market goes down 33% like it did during March and COVID, guess what? You can buy more shares at a 33% and in some cases, 70 to 50% discount, right? When houses price, you can buy houses because guess what? You have the cash readily available to take advantage of the opportunity. That's part of the reason why the wealth gap keeps getting bigger and bigger, is because those that have a financial plan and take advice and learn from these financial literacy topics and the content that I'm providing you and to put it into practice, when the opportunities do come up, they can take advantage of it, right? But in those situations, if you are on the opposite side, meaning if you haven't saved, your debt is too much, you're living above your means, you're not taking financial literacy seriously, those don't look like opportunities, right? They look like the opposite of opportunities. And so you're just trying to survive, and that is not a good way to thrive for the long term. So definitely put some money aside so you can take advantage of all the incredible opportunities and blessings that you can benefit from. Yeah. Now, I know I just went on a tangent, but it was so important that I get the information out to you. Now, as an individual deep into financial literacy understanding, you will begin to see that savings accounts can be more than just a place where you just put money. It can be an access that helps you open doors. It's a stepping stone into your next stages of your financial journey. And a big part of that is because I'm just so passionate about this subject, man. I really enjoy providing so much value, putting people on game on things that they have no idea they can benefit from, because everybody think the system is against them. Everybody think the game is rigged. And yes, maybe there's some biases and some challenges within the system, but guess what? It can still work for you. And so it's important to learn about the rules to the game, and so you can play it effectively and benefit and get your fair share just like the others. All right, so there are several types of savings accounts, and each is designed to meet different financial needs and financial goals. And so let's cover a few of those. And so the first account is the regular savings accounts that are offered by banks and credit unions. Oftentimes you can have a minimum requirement balance, and some of them have no minimum requirement balance. The good news is, even though your money is in there and it's not really fighting inflation or doing a whole lot, right, or beating the market and all these other more aggressive investments, you are still getting a little bit of interest on that. And the good thing is, in this current environment, at the time of the recording of this video, you can easily get a good 2 to 3%, 1 to 3% with money in your savings account, and even some forms of savings accounts give you 5%. So that's pretty decent for money just sitting there chilling. Next is high yield savings account, which I'll make a full video on that alone by itself at a later date. But for now, the most important takeaway is that you are going to get more interest from a high yield savings account than you will get on your regular savings account. Oftentimes these definitely require a minimum balance. Some of them will be 500, some of them 1,000, depending on the type of high yield and how much that interest yield that they're giving you is, will kind of also help them determine the minimum requirement balance that you have to deposit. That is followed by MMAs, which stand for money market accounts. And this one is interesting because it's a combination of a savings account and a checking account, right? So it blends the two. And the saving aspect of it is having a minimum amount deposited in there, and you're going to earn higher yield and interest than your regular savings. But the checking portion of it is there has to be a certain level of transactions going through it, right? So some of these MMA accounts, money market accounts require, let's say, 3 to 4 transactions a month going on, something like that, right? And so it's a little bit interesting, but nonetheless, really good thing to take advantage of if you want to have a little bit of a savings account that has a little more, transactional flexibility, right? Blend them. Next, we have CDs, which represent certificate of deposit, and there are certain stipulation that CDs provide you. The good thing is CDs also do provide you with higher interest than your regular savings. And the way that CDs work is the money is locked in for a certain amount of time, right? And it ranges from several months to, to years. And so you can have a 3-month CD, meaning if you put the money in there today, based on the terms and conditions, you can't touch that money until 3 months is up. And the good news is, as the time passes, you are earning interest, and when the 3 months is up, you get your lump sum that you have deposited in the account. Okay, so it can be 3 months, 6 months, a year, 2, 3 years, 5 years, 10 years. It all varies based on the term and conditions and the type of CD that you just deposited your money into. Next, we start touching on the investment savings accounts, and now we're really getting hyped and turning the heat up. The first one on this here is IRA, which stands for Individual Retirement Accounts. And this is incredible because some of us have jobs and professions such as, running our own business, having our own gigs, freelancing, and therefore maybe we don't have your traditional 401k that is provided by your employer, right? And so IRA, Individual Retirement Account, is another retirement vehicle that you can use to fund your own retirement if your employer don't provide you with a 401k, if you're a business owner and you make money without those traditional norms of working for a corporation or a company, okay? So just because your company don't give you a 401k or because they can't afford to do it, or you run your own business or you have your own, gig economy type of thing going on, it does not mean you have to putting money aside for retirement. We have the tools, we have the vehicles, take full advantage. IRA all the way up. Another retirement saving option is a Roth IRA, which differs from traditional IRA like I spoke on earlier. At a later date, I will make a video on each of these retirement vehicles, giving you the full detail and full breakdown. But the main takeaway from both of these is that you get to put money aside and invest that money consistently for long term, and therefore you can retire on that money. Roth IRA tends to be more favorable because it has a little bit more flexibility. It has the tax incentives are slightly different compared to your traditional IRA, which traditional IRA taxation kind of functions similar to like a 401k, the rules there. So, we'll dive into that at a later date. So be on the lookout. Subscribe if you haven't and have your notification on. So when these 2 videos do come up, you do not miss it. Get to the bag. Next savings vehicle is an online savings account. And this one is interesting because these banks don't actually have physical locations or spend a lot of money in terms of operating expenses. And so because it's online based, everything is just online. And therefore you get some of the highest yields when it comes to interest, right? Because they don't spend a lot of money. And so they can offer and entice more consumers and more customers to bank with them because they're going to give you 5% on your money. The next type of savings account is goal-specific savings account. Remember I said when you put money in your savings, you attach it to a goal. You can do that in some of these regular savings accounts that I have described, or you can open specific savings account for those specific goals, right? That's something that banks now have been providing a lot of people, as people tend to now save for specific reasons, right? And for some people, if they're saving for, say, to have $30,000 to put down on a house, they like to see, this account is for that goal. And let's say if they've saved $10,000, they like to be able to track their progress and how far they've come, right? And so it's a visual, they have some data visualization tools in there to kind of help you stay on target, help you stay motivated and keep going. So you do have those options as well. And for those that are in serious relationships, long-term relationships, married, you want to definitely have a joint savings account because at the end of the day, you are building a life together. You've blended both lives, both families, and so you're living under one roof. And yes, you can both have your own individual checkings account, individual savings account, individual stuff, but it is important for you all to also have a joint checkings account and a joint savings account, right? Because you are building together and both parties are responsible. Both parties can access the account evenly and both parties are 50% responsible for these accounts, right? And so you want to, when you get married or when you have a partner and you're really building something serious, you want to make sure both parties are doing their part and invested in the well-being of not just the relationship, but also the financial resources available for the relationship and your family. And don't worry, I didn't forget about the little guys. You always got to look out for the little guys, right? So there are kids and teens savings account, and it's designed specifically for that, right? These kids can't really own the account or because they're young, they haven't reached the minimum age limit. And so as the parent or the guardian or the uncle or the cousin, whatever role you play within that kid's life, if you can create a savings account on behalf of the kid and you can fund it for the kid, once the kid reaches, a mature age of say 18 and they can access it, or 16 where they can have limited access to some of the movements within that account, then they can also begin funding it, right? And so part of having savings account and building the habit of savings is not just for your own benefit, it's also so the young ones coming after you can see you doing it and they can learn, they can emulate. Kids are very, very smart. They pay attention. They will not do what you tell them to do. They will do exactly as you do. So if you want them to have good habits when it comes to saving, make sure you're practicing saving. And when they turn the age where they can comprehend some of this information, begin to definitely teach them, have them start practicing it. And by the time they get out in the workforce and full-blown adults, they have really good financial foundation. And this last one goes with the saying, health is wealth. You can have an HSA, which stands for Health Savings Accounts. This is great for those people that have insurance with very high deductible. And so you want to have a nice little savings plan in case you do get in an event where, something happens and you actually do got to pay your portion because of your deductible being so high. And so that is really attractive and lucrative, and it helps a lot of people that have that high deductible. Okay, so HSA, Health Savings Account. To summarize all these different types of savings accounts that we just covered, there are some things you definitely want to consider when opening a savings account or deciding to open any of these type of accounts. You want to consider the terms and conditions, make sure you read it and really understand what they're talking about. Pay particular attention to the interest rates, right? The fees, the yields that you're going to get. Also pay close attention within your own life in terms of your financial goals, your financial needs and responsibilities, and what you need the account to be able to do for you. And so blend all of that information, right? It's like pieces to the puzzle, and it helps you make a good, informed, educated, well planned out financial decision when it comes to picking a savings account. Opening savings accounts is generally straightforward and just require a few things. And so I want to make sure that we cover some of them for you. So when you go to open, whether it's an IRA, Roth IRA, high yield savings account, a CD, you have all the resources and the things you need to actually be able to open that account. First, you want to start by doing some research on the different types of banks and credit unions available, right? If you're somebody who needs convenience, you might want to pick a bank that also has a lot of physical location within your area, along with also having access to online platforms, right? And so do your homework, do your due diligence, look at these fees, interest rates, all these things that comes with the bank and some of the convenience and their customer service as well. Second step is to gather the documentation you need to open these type of accounts. So a government issued photo ID, your passport, your driver's license will suffice. Have your social security number or your ITIN number, which is your individual taxpayer identification number. And then lastly, you need to have an address, right? A location. So if you have letters that you has your address and information and your name on it, that all helps you definitely open these type of accounts. So gather those documents now. The third step is to really decide what type of savings account you really want to have. The good news for you is if you've made it this far through this video, you have about 5 to 6, 7 to choose from, and you have enough information to do additional research before picking the account. The fourth step is you can visit the physical location to get more, hands-on in-person information or communication about the bank and the account, or you can just go ahead and apply online. After you fill out the application and you've been accepted, you will be required to make deposits. And so before you even go and open and apply for the account, make sure you do have some money and some cash, because once you open it, you then have to deposit at least the minimum requirement if the account has one. Or in general, you want to be able to start using it, right? You want to make sure that when you put money in it, it actually works. And also, you might want to take out $1 or $2 just to see that when you take money out of it, it works. This next step also goes without saying. Make sure you have the account details, right? Your routing number, your debit number, all these other information, identification, confirmations. Make sure you have all of that. Don't just store it in your email when you get those notifications. I recommend definitely printing them so you have a physical copy of it as well. And make sure you have a file or a folder that you put all these important documents and records into. And lastly, once the savings account is open, every month you will get a monthly statement. And so my recommendation to you is to make sure that you're reviewing it. Take 30 minutes a month to just review the transactions and an activity that has occurred within that account, right? If the bank had promised you 5% interest on that savings account, well, you want to make sure you see, that bank account receiving 5% interest. Okay, so definitely do a nice little monthly review. And that's about it. Then you're chilling. I hope this video was relatable and enjoyable, and I was able to articulate exactly what your needs are and the lessons that you needed to take out of this. If you enjoyed it, definitely give us a thumbs up. Leave some comments. Let me know your thoughts, your feelings, any specific subject you want me to cover, or if you want me to cover a specific savings account that I talked about in this video, I'll be more than happy to. So until next time, happy savings, happy investing, happy new year, and turn up. I'll see you later. Cheers.